Well, hello and welcome to the Lending Podcast. So, we are your hosts here from Austin, Texas. This is the Guru of Mortgage, JB, and I'm Jeff Jones, sitting here next to him as comedy relief. We have this might become one of my favorite episodes today. I'm just gonna say, what are we talking about today, JB?
We're going to talk about what it means to you as a buyer when you are told that you need to shop for a lender.
Ooh.
What does that really mean to you, and what are you actually shopping for? What are you comparing? What are you looking for? And we're going to give you some tips and tricks, 30 years of combined experience here in the industry to share with you what it means to us as a lender when we have that referral come in to us. One of our past clients has referred a client, one of our friends has referred someone, a past client's coming back to us, a realtor has referred a builder. We have this referral network. The compliment that it is to us, the greatest compliment is that referral. And so what do we do as a lender to build your trust, and what should you be looking for as a buyer in your lender when you are referred to someone?
Yeah, things to consider when shopping lenders or being told to shop for lenders. I think this is good. So, when I bought my first home, I didn't know what I was doing, right? So I was really young. I think we were married for a year when we bought our first
Was that in
home.
California, or was that
It
the
was in
New York?
California, Redding, California. And I got turned down by banks because I thought I was supposed to go to banks. I walked into like Bank of America and a couple other banks, and they're like, no. And then I went to a broker and I got a loan. And so I took what I got. I couldn't really shop because I got turned down. But in this day and age, a lot of times people will go to a realtor and go, hey, I want to buy a house. Or they'll just go online and start Google searching things, right? And sometimes online, or your lender might say, get multiple quotes. And what most of the time they're saying, what are they saying most of the time?
Well, what they're saying is shop for the best loan, shop for the best interest rate, the lowest
Lowest,
closing cost, the
yeah,
lowest interest rate. And so we've conditioned our buyers out there as a society
right,
with what you read about in news articles, what you hear from friends and family, what you hear from maybe a real estate agent or a trusted advisor, get the best deal. Well, what does that actually mean? And I think we're going to break that down for you today, because the lowest interest rate isn't necessarily the best loan.
oh,
And that's really a hard concept to grasp.
100% hard for
Yes.
people to grasp.
Yes. So, as Jeff and I were talking about this particular episode, I think in the last few months, especially last year or so, as the industry has really stayed at these elevated interest rates, year over year, we're about where we were a year ago at the same interest rates. 30-year fixed average right now is about 7%. There's some 6% rates. There's some 8% rates. So because rates have been elevated for a couple of years compared to 2020 or 21, it's common for buyers to want to get the lowest rate.
Right.
And so we're going to talk about how do we get the lowest rate, and is that what you really should be shopping for?
Right.
Or should you be shopping for something really more anchoring, which I'm going to sum up in one word, and that's trust.
Trust.
And I truly believe after 23 years almost of doing this, that is the number one word when you are shopping and talking to lenders. Are you building a relationship with that loan officer, with their team, and your agent and your lender and you as a buyer are working together to get you the best possible deal on a house? And that can be the lowest interest rate sometimes, but sometimes it's not. And we're going to talk about a couple of examples.
Yeah, and if you take anything away from this podcast episode, it is going to be on find a lender you can trust. And that is probably the best piece of advice if it was shortened to anything from this podcast and all of our episodes. It's find a lender you trust. The reason is if you're convinced into something, you can be convinced out of something. So what happens in our industry is so much overload of information and variety of reasonings because it is complex what we do. But in the end, you need to trust your lender. And not only for one transaction, but don't you want to have that person in your corner for your lifetime of transactions?
Absolutely.
So I also, along with trust, I'm not just talking for like the next 30 days. I'm talking about for the rest of your life.
Mm-hmm.
Because if you get a lender that's amazing and is in this for the long haul as their life career, then that's a gold mine for you for every transaction of your life or for any information you need down the road regarding your house and how
So
much
true.
wealth you can get from it and other options you can do with it.
Yep.
And so it's not just a one-time transaction. You're building a relationship that can be with you for the rest of your life. Maybe your kids' lives, maybe your other family members' lives. Because a good lender, just like a good attorney or another good profession that you have, a CPA, these people can be there to impact your life for the long term.
That's right. I mean, whether it's a family, we have a chiropractor. I've been using my same chiropractor since 2002, 22 years.
Yeah,
We are close. He is a client of
yeah.
mine. I'm a client of his. That trust is embedded,
Hmm.
has been for 2 decades, and it's just no matter what he says as far as health goes, I'm going to listen to him, right?
Yeah,
And so there's so many of the CPA, financial advisor, physicians, chiropractors, whatever your those family relationships, those and their business relationships as they start, but then they become family relationships, like family.
yeah. I got an analogy for you.
Yeah.
So my kids are really good at talking me into buying them Nintendo Switch video games.
Oh.
So last night was the Game of Life board game. You and I grew up with this board game.
Oh,
It
for
was
sure.
really fun. You take
The
those two
little
little
blue and pink.
right,
Yeah,
and they
yeah.
drive their cars around the track, and you spin the wheel. Well, the digital version is hilarious, but in that game, you realize how many life changes you really go through, right? And in this life, like how many times you buy and sell a house, most of us, it's becoming multiple times throughout our life,
Sure.
right? So why not continue to get the same great knowledge and same great support that aligns with your values and your trajectory with your life with a great lender? So
Yeah.
starting that off as early as possible, I think makes a big difference.
I love that. And I'm gonna take another T word. We got trust, which I believe is very important. I'm gonna add to that and say transparency.
Ooh,
And I believe the trust that
yep,
that we earn from our clients and our referral partners comes through transparency. And really what I mean by that is actually showing you behind the curtain, behind the scenes, how the interest rates move. What are the costs associated with your specific situation and your credit score and your income and your debt ratios and all the things we look at to customize that for you, giving you that look behind the scenes. I mean, you should be involved in choosing your own interest rate. We talk about this a lot, and I think because our industry has trained, I believe, has trained consumers to look for the lowest number. You don't really know the components that are going into that lowest interest rate, lowest closing costs. Like, what does that mean? So let us help you compare so that you can actually make the best financial decision.
yeah.
And then I want to give a good example, but
Oh, I was going to
jump
give
in.
an example.
Do it.
We probably have hundreds of examples. So
That's right.
what I had this borrower that came to me really angry at their current lender, and she's like, "What do I do?" She knew that I was a lender, and she asked me a question like, "What do I do with my lender?" That they didn't realize that the lender was expecting them to pay off a car,
Oh,
and that's how they can afford that monthly payment. So what the lender did, without knowing to the borrower, is they pre-approved them for a monthly payment
mm-hmm.
that they could only make if they had no more car payment.
Oh, wow.
And so that's how they stretched their buying power. The borrower didn't know that that was a part of the equation. So that's a part of the transparency. When we do our pre-approvals and look at your buying power, we want to make sure we're on the same page with you. Like, are you willing to pay off this car? They didn't ask that question. They
Right.
just wanted to show this borrower the rosiest picture of their best buying power.
Yep.
And the borrower had no intention of spending $7,000 to pay off a car loan,
Right.
but
Yeah.
they needed that to close on the loan now.
Yeah. And sometimes that's a good strategy if it's discussed
If
and
it's planned,
transparent up
yeah,
front. Then the
right.
borrower says, "Sure, I can do that," and
Yeah,
that's how we're going to get some more purchase power. That sounds great.
yeah,
But if you're kind of backdoored on that, so to speak, you
yeah,
find out about it later. That's an issue.
yeah.
Well, and just the one yesterday that I had. This is a happens to be a client who's going through a refinance right now. It was a investment property that he purchased a while back, and to buy the investment property, he used a private money loan. So
Hmm.
it's a really high interest rate. It's like
Yep.
15% interest
Right.
rate. But that's what he needed to do to acquire the property. renovate it, and now he's refinancing it into, cutting that rate in half basically. And so we were looking at different rate scenarios, and the lowest rate on the board did not make sense to him because he's not going to keep the property that long.
Right.
So here's the other most important. If you're a lender, if you've talked to a lender and they have not asked you this question, this is probably the most important question. How long do you plan on keeping this property? Now, we know you may not know that. We bought our house in 2015. Right. We thought we'd be there 5 to 7 years. It's been 9 years. We're still there. We love the house. So we understand that those timelines may change. But if you're in the military, or if you relocate every 2 to 3 years, or if you're prone to moving around the country with the nature of your work, you're not going to be in your house long term. Let's dissect strategies that give you the best financing for a shorter term loan.
Right.
It's still a 30-year fixed mortgage. We're not talking about maybe an odd type of loan product that is risky. We're talking about low risk, however, at the same time, getting the best benefit of cost and rate. And those are two different strategies depending on how long you're going to be in the home. And so that's a super important question. We also ask questions like, how much cash do you want to have left over after you close?
Yeah.
So if you want to keep a certain amount of cash left over, that means we want to maybe maintain a lower closing cost scenario so that you have more cash reserves, a little bit more dry powder, as I like to say, and you've got some cushion there and some security, and that's real important to folks.
That's a huge deal. I think, when you're looking at shopping lenders and you originally think about doing it, most people's minds, it's going to go with the interest rate. It's going to go with cash. And, both of those things drive the monthly payment. So what I hear a lot of people say is like, well, I have X amount of dollars, like what you're talking about.
Yeah, we've got 30 grand.
30 grand in the bank account. Yeah. And, a lazy lender will just basically use all of it in their scenario. And that leaves you with $0 when you get your keys. A good lender will go, how much money do you need to have and are willing to spend, to get this funding? So that is a very different relationship. One is just doing their due diligence to try to rush the paperwork through and get you a quick answer. The other one is spending time with you, So.
Yeah, and there's a correspondence typically in the industry between lower rates and higher costs, right? So the lower the interest rate, typically the higher the costs.
Right.
The higher the interest rate, the lower the cost. Those are corresponding. And so with a fully transparent process, you as a buyer can actually see rates at 4% and rates at 8%. Yes, even in this market, you can actually see an interest rate at 4.25 or 4.5. Now, is it really expensive? Yes. Like, you're probably not going to choose that scenario. But the point is, interest rates there's not one rate. There's 30 different rates.
I like how we say it. We all have the same rates available for you.
Yes.
But the cost of them is individualized for each scenario.
That's right. And then, of course, the different banks that you're talking to, the different financial institutions, will price loans differently. We call it pricing the loan is equivalent to the cost to obtain the rate, right? So Bank A and Bank B could have the same interest rate, but their costs are different. And so it is important as a buyer to be shopping from the standpoint of, I want to get the best terms, I want to get the best rate, but you've also got to look at, how is the lender that you choose, how are they going to advocate for you and help you close on the home and help you win the offer. We're not really in a lot of multiple offers right now. We see some, but it will turn when those rates come down just a tick and you've got more people coming off the sidelines. Now you're in a position where you're up against a couple of competitive buyers, right? All 3 or 4 of you have your pre-approvals. You put an offer in on a house with the seller. Who wins that offer? Well, it's going to be the best relationship and communication. We've talked about this a little bit. Communication between buyer's agent and listing agent is going to put you maybe a head up of your competition. Also, the lender that you're using. Are they local? Are they a national lender? Can the listing agent get a hold of that lender? Right. Can the lender move quickly? Can you close in a couple of weeks? Yeah. All those factors play into, you found your dream home. You want to close on it. And
Right.
so when you have a relationship built on trust and transparency and accountability, you're going to close.
Yeah. Yeah. It's so I don't know if that could be understated enough of the power of a pre-approval lender from a lender that has a amazing reputation compared to a lender that has a questionable reputation. So when a seller is getting offers in and they have multiple offers in, they're going to look at risk and reward, right? So what's the risk of trying to close a loan with this person that's financed through this agency, and what kind of reward am I going to get from that risk, right? So is it the reward being like the price point, like, oh, they're asking this one's asking this, but we know we can close with this one.
Yep.
This one's closing, this one's got like an A plus plus rating in like
Yeah.
the region's mind. It's a local lender that like has tons of deals, and title companies love them, and the realtors love them because they're accessible, communicate, close on time, less drama, and very professional. So it's a big deal to
And
have a reputable lender.
for sure, and that's a pedigree and a
Hmm.
resume that can be verified. Also, some
Right.
unverified lender information out there. Perception is reality, right? So
Yeah.
you've got sellers and listing agents that it might be a lender that does a great job, and we're not
Right.
trying to say that every other lender
There's some
is.
good ones out there.
There's some great ones out there, and
Yeah.
we're blessed to be in a very competitive market here
Right.
in Austin, Central Texas. There's some awesome
Yeah.
lenders. I have friends all over the industry at different companies that do a great job. What you've got to know though as a buyer is when you're submitting an offer, the perception is the reality. So the listing agent and the seller are reviewing that. And if they can't verify that bank, if they have had a bad experience potentially with that bank,
Right.
and I'm talking more about the national banks right now because
Yeah.
they do have amazing banking skills, and they do private money loan, or they do personal loans, and they do car loans, and they do checking and savings accounts really well. And then, oh yeah, we do mortgages, some of the national players. And the challenge that we have seen, we have heard, is their lending box can be a little smaller. Their ability to underwrite to specific guidelines is restricted. And so by using a local mortgage lender who is really directly selling the mortgages to the end investor,
Right.
we know exactly what that end investor is looking for. We're going to underwrite specifically to those guidelines, and we're going to close it instead of inserting our own opinion as to whether or not this buyer is going to make their mortgage payment. And I think that's where some folks get hung up with some of the national
Yeah,
lenders.
and I think one of the things that's also important for people is think of your experience that you're going to go through when you're buying your home and you're working with your lender. So one of the things that happens is you're wanting updates on what's going on with the status of your loan. Hey, I provided these documents. Do they look good, or do you still need me to provide something else? Are you waiting on me for anything? What else do I need to do? What other expenses should I expect coming up? You're going to have hundreds of questions to your lender that only your lender can answer, to be honest
That's
with you.
right.
That only your lender can answer. That's very important. Are you able to get a hold of them? It's like, hey, I just want to text my lender, on a Friday afternoon, make sure everything's good. Can you do that with your lender? If
Yeah.
that's what's important to you.
And certainly to that point, we pledge proactive communication, right?
Yeah,
That's part of our
right.
process. At the same time, as proactive as we are and want to be, we also really want the communication back. We want the questions. We want, hey, I thought about this after we talked last time, and I've got another question. Can you help me real quick? Absolutely. Like it's constant dialogue,
Yeah.
right? And we've also found that in many cases, our buyers will call their real estate agent with financing questions.
Sure.
Hey, I got this document from my lender because they can't get a hold of their lender, perhaps, and so they're calling the agent. And so it's really a case where now the agent is saying, "Well, that's a good question. I'm not sure. I haven't seen that before. Let's try to get a hold of the lender." And then if you can't get a hold of the lender, you're in this limbo with this
Mm.
question. And so I think circling back to I'm going to shop lenders. What am I looking for? I'm
What are you
looking
looking for?
for that
Yeah.
ability to build trust, to build a relationship with your lender so that you can communicate and
Right.
your other parties to the transaction can communicate with us. The insurance company, the title company, the real estate company. If there's other trades involved because the property needs work, there's roofers and plumbers and
Yeah.
electricians and things that may happen during the process where we're all kind of working together to get you closed. And so we might have 300 to 400 emails on one file. I mean,
Right.
I've seen that. It's like, I mean, that's not ideal,
Yeah.
but there's so much back and forth in communication.
Right.
You're squeezing this giant investment, this biggest purchase of your life, into a 30-day window in some cases. Maybe a little less, maybe a little more. That's a lot to do in a very short amount of time, and we all have other things going on. You've got family, you may have kids, you've got pets, you've got a job, you've got travel, you've got all these things, and then, oh yeah, you're buying a house. So let us do the heavy lifting and make sure that your lender is in a position to do the heavy lifting,
Right.
and is not going to leave you wondering, like, what the heck do I do next? That's worst case scenario.
Yeah, stress is no good.
No.
There's already plenty of things to stress about.
That's right.
Let's change gears a little bit. So when somebody is shopping multiple lenders and maybe they are looking for trust, how do they know which one to trust more? So there's some should I call them red flags when you're looking at a lender that says they're providing you numbers and they don't look like an estimate. So here's good examples. We talk to borrowers all the time that say, hey, I've gotten other quotes. And we say, great. Good information is how you make good decisions. So you need to weigh your options. Most of the time, a lender is going to ask to see what that quote looked like because they need to measure to see, hey, is this legitimate that you're getting? Because you're going to be getting sometimes quotes from things that actually are not something somebody can deliver on.
True.
So you're going to be getting a fee worksheet or some other kind of numbers on paper that they might not be able to deliver on. If they didn't do a very good job reviewing your file, if they were sloppy at what they do and they just put down a general scenario, or it's just something on somebody's website, those aren't estimates until they do a full review, a full pre-approval. And there's guidelines on what we call those pre-approval letters.
Yep.
And they have check boxes that'll say, we did our due diligence on verifying credit, assets, income, all that good stuff that does need to be documented and to be received to be a good review. And so we can get you good numbers.
Yeah, that's such a good point. So I would make the analogy of it's very similar to going to the doctor, but before you go to the doctor, you feel sick, right? Oh, I wake up, I don't feel well, maybe I should go to the doctor. I tell you what, I don't have time to go to the doctor today. I'm just going to call the doctor, tell them my symptoms over the phone, and have them prescribe something. So you call the doctor. Tell me about your symptoms. I have a headache and I have this, I have that. And they say, well, you should really come in to get checked out. No. I don't have time. I'm busy. I've got kids. I've got work today. I can't take off work. Just give me some medicine. What can I take? Well, tell me a little bit more about do you have chest pains? Do you have headaches? Do you have leg pain? What is it? Well, I just don't feel well. Prescribe me something. How can that doctor's office properly prescribe a medicine without doing a full exam on that patient?
Right.
And the answer is they can't, right? They're guessing. And I truly believe in our industry, that's what we're doing as an industry, as lenders who don't gather enough information up front.
Right.
That's why our pre-approval process is so thorough. Yes, we're putting you through, we're asking a lot of questions. We're asking questions so we can give you the best prescription, right?
Yeah.
The best guidance. And I think so many of us, we're in this fast food society. We just give me a quote in 5 minutes. Well, we can do that, but is it really going to be accurate? And are we meeting your goals? Have we established what your goals are? You may think you know what your goals are because maybe you've read online and you're educated yourself, and perhaps you have a family member that's giving you some guidance. Your real estate agent's giving you some guidance. Yes. However, until we start peeling back those layers of everything that's going on in your specific situation, we don't really know how to quote you and how to structure your loan. So I'd be leery of the quick, fast 5-minute pre-approvals, the 5-minute rate quotes, because that's like you not going to the doctor but asking for a prescription. I really believe that's something that's sort of spread like wildfire in our industry because information is so easily accessible. I just want to get a rate quote for reasons that we just talked about. let's take a deeper dive
Yeah.
so that we can properly structure your loan.
And I think that is huge in the sense of, because of the websites out there do give all kinds of language that sounds like they're giving assurances of what your deal could look like. I mean, most housing listing websites will have some kind of like mortgage calculator on there,
Yes.
right? And you are hopeful you're going to be one of those scenarios. Well, they're giving you a scenario they cannot deliver on, for number one. Also, if you see an advertised rate out there, then that equates for maybe a monthly payment. That advertised rate is a scenario most people don't qualify for. It's like their best person in the world. This is our pricing for you, and 99.9 of us don't make that percent. It's a curve. So you don't want to fall into the trap of
Right.
those quick and dirty estimates. They just don't. They can't deliver on them.
Yeah, and if you're a person who really loves to research a lot before you have
Yeah.
the initial consultation, definitely do that. Get on. You can. There's lots of resources out there. A lot of websites
Right.
about first time buyer programs and stuff. Read through that. Formulate your questions and maybe your own self diagnosis of where you think you are
Yeah.
before you have that conversation. If that's your jam, and then as we're asking lending related questions that maybe things you have not thought of yet, or we're just getting a deeper dive on your employment and your income, and then we're giving you that guidance. You may come to the table with our in our first conversation. You may come in knowing exactly what you want, having it all figured out, and we may say, you're right, you've got it nailed. Here's your down payment, here's your loan, here's your terms, and we've kind of made this decision together, and you've really come with your own diagnosis. Most of our clients are not like that. Most of
Right.
our clients come to us and they really want guidance. They want to seek the counsel and say, hey, you're the professional here. Like, what should I do? Here's my scenario.
Right.
And that's what we love to do, is putting those scenarios together so that our clients really feel like they're heard, and we're meeting their goals. And we
Right.
can only meet your goals if we know what you're looking to do.
Yep. I like that.
So that really comes down to trust. I think that building that relationship, building that trust. I love what you said about the future transactions as well. I mean,
Yeah.
our company has a network around the country, all 50 states.
Yeah.
So whether you're buying on the East Coast, West Coast, Midwest, Austin, Texas, we can, through our network of lenders, help you, through our company. We may not be licensed in that specific state, yet our network of
Our
loan
friends
officers,
are.
our friends are, our colleagues, right? And so having that solid lending relationship, I really truly believe helps you long term. And we have clients. The client we just closed today, I first met them in 2010, so 14 years ago, and we're closing on yet another transaction for them. It's like our greatest compliment. It really is
Right.
fulfilling to have clients in our database that we've been helping for over 2 decades in some cases. That these folks, almost 15 years. So let us be that relationship, that future lending relationship, lifetime relationship for you. I think it's something that mutually beneficial.
Yeah. I like this episode.
Same.
This was a good one.
Yeah.
Feel free to shop. Find somebody you trust.
Absolutely.
That's the goal.
That's the goal.
That's the goal. They'll get you a great deal, I promise you, as long as you trust them well. And, they don't have a 1-star review or something online.
Exactly.
And they have past clients that they've used multiple times. So that's a good sign. But we're here for you. If you want to give us comments, we love to hear from our listeners what they'd like to hear more of. And feel free to like and subscribe to the Lending Podcast. Thank you.
Sounds good. Take care. We'll see you soon.
Bye.